Hi, my name's Andrew Masters and I'm an analyst at FIBO Group. In this video, we'll talk about the properties of technical indicators and the simplest indicator, the simple moving average. As we've already mentioned, the main tool of technical analysis is the technical indicator. Regardless of its name, the technical indicator fulfills the following functions in the market. 1. Identifies the presence and direction of the trend. 2. Generates trading signals. 3. Is used as the dynamic support and resistance lines. We remember that trend indicators work only when there is a trend movement in the market. What does it mean to generate trading signals? There are the same entry and exit points. The indicator shows where we should enter and where to close a position due to the change of the situation in the market. Indicators are used as dynamic support and resistance lines. This is the most pleasant part of technical indicators. You do not have to think where to place a stop loss in order to correctly calculate your costs. You simply move the protective order following one of the indicator lines. It's very convenient. Please make sure yourself. However, every medal has two sides. The so-called technical indicators are not perfect. Most technical indicators, if not all, of them are lagging. We receive the required signal, but with a certain delay. You will understand the reason of this phenomenon after we discuss the details of their structure. The reference point of the majority of indicators is a simple moving average. It's the backbone of many technical indicators. A simple moving average is calculated by adding the closing prices for a certain number of periods, example 12 hours, and then dividing the resulting amount by the number of involved periods. Don't you understand the principle? Don't worry, let's analyse the method of moving averages in more details. Let's assume that you decided to calculate the 5-period simple moving average SMA in the hourly chart. You should add up the closing price of the last 5 hours, and after that, divide the resulting number by 5. That's it. You have an average price for the last 5 hours. If you combine these averages together and place them in the chart, you'll obtain the moving average with a period 5. One of the most unpopular trading strategies according to the moving average looks as follows. Buy when the MA rises and closing prices are higher than the MA. Sell when the closing prices are below the MA. We'll run and try and apply the approving moving average in real life. Meanwhile, during the next lesson, we'll tell you about the other trend indicators.